Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're disco and please, before I start, if you like this material and you want more and more often, please hit the like button and share and subscribe. This is a market brief, and I'm not talking about the correction. I'm talking about a bear market, a market meltdown. Good deal. This is the VIX moving averages only. The black moving average is the 10-day moving average. The green, the red is the 50, and this color, the light blue, is the 20, and the green is the 200. Now we are convergence in a way that only happened three times in the last 10 years. This is the third time. The previous two produced the 2020 meltdown and October 2018 meltdown too. This resulted in over 20% in IWM. This resulted in the fast price destruction since 87. Okay, so this is not normal. This is a change of trend. Good deal. This is really important. Please remember that. Okay, let me talk about the VIX itself. It is definitely in a bullish disco combo and in a bullish mode in the weekly time frame. And also, let's look at the monthly time frame. Also, the monthly time frame. We need the stochastic to come out at 20, and it will come out at 20 by next month. We have the bullish MACD and also the RSI almost over 50. So we have the daily, weekly, monthly. Let's look at the quarterly. Good deal. No, it's not. That's not there yet. But we have the daily, weekly, and monthly. All right. So bullish formation in the VIX. This is two charts in one: the VIX price action right here, and also the Dow Industrial price action below it. I have never seen such a bullish divergence. Bullish divergence for the RSI that long. So you make higher highs, an all-time high in the Dow Industrial price action, whereas you made higher lows in the VIX, and you're still in breakout mode right here, and breakdown mode here in the Dow Industrial. So, okay, so I talked about the moving averages, the convergence, and also the daily, weekly, and monthly time frame, the bullish disco combo. I talked about this mirroring charts between the VIX and the Dow Industrial. And please do remember that the VIX itself, it's extremely important to understand that if the VIX go up to 20 this fast, this implies plus or negative price movement or percentage movement in the S&P in the next year, 20%. So this is quantitative methods. This happened in the past all the time. 20% movement. I'm sure it's not positive. It's going to be negative. It's going to be caused by the high yields. Please do remember that it's not only a value. It implies future volatility. So 20 plus and minus next year, month 7.22 plus or minus, a week and a day. And we've been seeing this a lot now. We've been seeing this a lot. So please do remember that. So that's a thesis for a bear market, a negative 20% from here. Okay. So what may cause this thing? It is the high yields. Most recessions in the past were caused by high oil prices. This recession will be caused by high yields. Why did the oil prices cause recession? It caused recession because it it affected the economic expansions. Same thing what the high yields would do. It's about economic expansion. It's going to be affected, and the bear market is happening right now. Good deal. So I talked about the VIX right here. Let me talk about this golden cross that about to happen in the VIX. Okay, we might have a golden cross very soon between the 50 and 200-day moving average, which means even higher value than 18. It is extremely probable that we will have higher value after this bullish crossover, which implies more volatility a year from now. Good? So let's see the effect of it in the past on the S&P. So golden cross, S&P went down, it was the bottom. Golden cross, S&P collapsed, bear market. Golden cross, oh Maroon, 2020. Good. Golden cross, right here. A mini correction in 2019 during the China trade war at that time. Okay. Golden cross, October 2018. Golden cross, the mini bear market that took place. It's not a technical bear market, but it's a strong correction that took place from 2015 to 2016. So, capiche? Only one time it produced a bottom, but it was after a severe price destruction. We only getting started, sweetheart. Good? So I talked about the VIX, the important numbers of the VIX. I talked about the VIX moving averages. I talked about the VIX and the Dow Industrial. I talked about the VIX Golden Cross and the S&P. Good deal. Now this is USD price action, which implies liquidation mode very soon. We're extremely in bullish formation. We are in breakout mode first, and we're forming a bull flag. So it's extremely likely that when you're going to take out this high very soon, extremely soon, based on the VIX, based on the DXY USD bullish formation, and also based on the golden cross. So you have now a bullish formation in all of the moving averages for the DXY. Capiche? So all in bullish formation. All. Okay? So more it's extremely likely that we're going to break this bull flag. Okay, so liquidation mode based on the USD bullish action, based on the VIX. All right, good deal. Now, I talked about this. Yes, sir. Extremely obvious. Another thing, let me talk about it later. Okay, so I did talk about this. Let me get rid of it. Oh, no, I didn't talk about that. So every time you have a golden cross between the 50-day and 200-day moving average of the USD DXY, you have a sharp sell-off in the market. What's the percentage? 100%. But this time I'm arguing for a bear market, not just a blip. Okay? So this happened, what? Yes, 100% of the time. And this is the last 20 years. Okay. Yeah. We talked about this bad boy, and this is, yeah, it's the same thing, man. Same thing, I promise. Yes, good deal. Oh, this is Apple, and I did argue that we have a hidden divergence, and this bad boy will go into meltdown mode, and it will help the Dow go down, and also the S&P and then Nasdaq. Good deal. Okay, this is the Dow Industrial Nasdaq ratio, and we have a bullish MACD here in that ratio, on this always all the time put a lot of pressure on the S&P. So now the Dow Industrial is outperforming the Nasdaq, and that's not good. Good deal. This is the Dow Industrial MACD in the weekly time frame, and I talked about this in the last video, and it did come true. It affected everything. It affected the dollar, second up week, affected the USD JPY, the second week, and also up, and now even 30-year yield is up for the second week because of this beautiful sell signal in the Dow Industrial, and price expansion to the upside for this, and then this. Good deal. This is the Dow theory, and definitely now we are in breakdown mode. In this is the weekly time frame for the Dow transports, and it's MACD, and also the Dow Industrial, all in the weekly time frame. That's why I know the bear market is in the horizon. We are definitely in breakdown mode in the Dow transport, with definite bearish MACD, and also the Dow Industrial is gonna follow suit. And please don't forget that based on Dow theory, every time you have a negative divergence between the Dow transport, lower high, all-time high, bad things happen. They call this lack of confirmation. Good deal. This is the Dow Industrial in the monthly time frame, and it did hit two measured moves. Okay, this is ABC, the blue one. See here, ABC, the blue C is almost the 138 Fibonacci extension from A to B. This is the 2022 high to the 22 low, and this is a top. Good. So we have another measured move, the green one, ABC, from August high to the recent low in October, and we see is the almost 227 Fibonacci extension, and that's definitely a terminal move. So over a full measured move right here. So double the price targets with negative divergence, and the RSI misses the 7D level. Every time this happens, a bear market takes place. What is the percentage? 100% of the time. And not to mention, we have an almost bearish engulfing here at the all-time high for the Dow Industrial in the monthly time frame. So last time it happened, a formation like this was in 2020. Good deal. High reading in RSI, higher high missing the 70 level, and boom, it happened every time, all the time. And this is, I back tested this for at least 30 years, and it is bulletproof. Every time this happened, a bear market takes place, at least 18 plus correction. Please, before I leave, like, share, subscribe, and do remember, disco is forever.